Welcome to Money Talks, a weekly feature on FM 93.5 The Berg and WMEG AM 740. Today we will talk just a little bit about money, maybe some of the things you can do with it, how it can impact your life, some ideas on financial planning and investing, and getting the most out of the money you hope to have, already have, or want to pass down. So sit back, relax, listen, and maybe take some notes, as you may have some questions by the time we're done with this edition of Money Talks. Good morning, Dan Joss. How are you today?
Doing well, thank you.
Good. Glad to hear it. I'm doing well myself, and I hope all of our listeners are doing well because they get to hear another episode of Money Talks with Dan Joss.
That's right. Today we're going to talk about another bias or two.
Another bias or two. Okay. Well, tell us about biases when it comes to money, Dan Joss.
Well, last time we talked about familiarity, where we do things that we're familiar with. We like that. So
Right.
It prevents us from sometimes changing things when we should change. This time a more famous bias, fear.
Yeah, fear would be a bias.
And the opposite one is greed.
The opposite of fear is greed?
In terms of money, they're both biases.
Okay.
And there's a chart I have on my wall that shows fear and greed and how the market goes up and down, sometimes based on fear and greed.
Okay. Yeah, I guess I kind of see that because you're afraid of losing your investment and you're greedy because you want to make sure you get as much as you can.
Right. So sometimes at the wrong times, if we're fearful, we sell.
Right.
And then if the market recovers and it's on its way up, we buy and we hurt ourselves.
Okay. I get that.
And because it's a bias, we're not choosing really to do these things. It just kind of happens.
Okay.
So it's good to think about it and be aware of our fear bias and our greed bias so that we don't fall into hurting ourselves.
Okay. Yeah. So tell me a little more about this and why is it helpful to have an understanding of our biases when it comes to fear and greed and money?
Well, we could just take a question I had from a client recently. They asked about what I thought about the markets, given that the election was coming up. And they were, without saying it, being a little fearful of the unknown of what could happen at the next election and what that could mean for the stock market, and that in short could mean for their wealth. And so I mentioned that I don't have a stance on the market, particularly based on the election, because every 2 years there's an election.
Right.
And so to be fearful of something that arguably is regular and periodic is a little bit irrational.
Okay.
So to just be aware of that and how sometimes people can veer off of their investment plan based on a fear they have. Or sometimes they're greedy. They see things going up,
Right.
and they want more of it, and that can lead to bad things also.
So what it really winds up dealing with is extremes.
Right.
And extremes are not good things in financial portfolios, I would imagine.
Well, they could be, because I think that's right. I think Warren Buffett says if you should be greedy when people are fearful and be fearful when people are greedy. So if you could do the opposite of what you are naturally biased to do, that may be helpful.
Okay.
So we like volatility. In the short run, there's lots of volatility in the markets. In the long run, markets are strongly correlated to earnings for each company. And so short-term volatility is just what happens in the news. And we see the news, and we could have a fearful reaction to it or a greedy reaction to it. And so that's fine to have volatility, and I wouldn't say it's a good thing or a bad thing. It's just there because people sell and people buy every day. But to let our fear, whether recognized or not, impact our fortune could be a bad thing.
Okay.
And it's natural to have fear. We should be fearful of some things.
Kind of saves our lives a lot.
Could save our life, and we could be greedy at times too, or aspirational, or looking out for the good of our family and wanting a little bit more of things. Those are natural things. It's just that when they adversely impact our investments that we get hurt.
Okay. Yeah, I think, wasn't it in the movie Wall Street, Gordon Gekko said, greed is good?
Greed is good. That's right. In all of its forms, greed.
In all of its forms,
good.
Yeah, I don't know about that. That probably leads to gluttony or something.
I'd agree.
Yes.
Yeah. There's a great book by Jason Zweig, Zweig, Your Money and Your Brain, where he talks about fear and greed and some other biases. But we all have them, but we should be aware of them and avoid reacting to our fear. But it is real.
Okay. So this is not what most people talk about necessarily when they go to their financial advisor, is it? Or perhaps.
Not most people, no, but I think they should. We should have the conversation of risk tolerance. It's our ability to withstand the risk and not being fearful or greedy. And then risk capacity, how much we can actually afford to lose.
Right.
So there's two parts to determining our risk in relation to a portfolio. So every investor should have that conversation with their advisor.
You mean more so than just circling on a scale of 1 to 10 whether you're...
That's right. Yeah. Like when you go to the doctors, they have a smiley face for no pain and a tears and a frowny face for lots of pain. Yeah.
Okay.
It should be a little bit more...
in-depth.
A more in-depth conversation with your advisor about how much risk you're taking with your portfolio.
Okay. Well, that's good. I think the approach that I've been gathering that you have is unique in that it's really more of a mindset and a complete understanding as opposed to what's a hot stock today.
That's right.
Yeah. It's a global picture of your financial welfare, not just should I buy this stock or should I sell this stock?
That's right. Well, and I take an investing approach. So when you say buy or sell a stock, we all do that. But with a long-term view of investing, that's a long-term prospect.
Okay.
And as a business owner that businesses take time. And,
yes, they do.
And you don't want someone being a partner today and not being a partner tomorrow.
Right.
And in some sense, that's really what investing is. And we certainly don't want fear or greed changing what we're doing.
No, we do not. It's better to be a thinker and really understand and analyze.
Yep.
So with that note, if someone wants to get in touch with Dan Joss of Joss Financial, what's the best way for them to do that?
They can call my number, 757-903-2127, or visit my website, jossfinancial.com.
Excellent. Well, Dan Joss, I appreciate you being here for Money Talks.
Thank you.
Money Talks is a weekly program presented for the listener's benefit and entertainment. It is provided at no cost to the listener, and the ideas, opinions, and comments are not to be construed as legal advice, tax advice, investment advice, or other advice specific to the listener. Listeners are encouraged to seek the advice of a licensed professional or other qualified party when dealing with financial, legal, tax, medical, investment, insurance, taxidermy, plumbing, electrical, carpentry, real estate, chiropractic, veterinary, oral hygiene, hot air ballooning, etc. We have given you some food for thought. Now, call a licensed professional such as Dan Joss at 757-903-2127. Thanks for listening, and remember, failing to plan is planning to fail.